Welcome back to another episode of the Block Runner Podcast. I'm your host, William, always here with your co-host, Iman.
What's going on, dude?
And on the sticks, we got TJ.
Hello.
And then finally, it's time to clock in, Iman.
I'm clocked in, dude.
We're bringing in SimpleFarmer for the first time on the podcast. Thank you so much for joining us, man.
Mr. SimpleFarmer, dude. You forgot that part. Yeah, it's great to have you.
Thanks, guys. GM.
Yeah, it's great to have you, man. So clearly we've been talking about Stonk Brokers.
Stonk
Brokers.
Stonk Brokers.
For the last couple of videos, just because, we come from the NFT space since 2019, if you can believe that.
Yep.
And so we got to see all the craziness that happened in 2021 and metaverse and all this stuff. And then it sort of died off. And then we got into ordinals. We saw essentially NFTs, right, on Bitcoin.
On Bitcoin, yeah. That was cool.
And it's like, whoa, wait a minute. NFTs are finally coming back.
Yeah.
And then it sort of kind of died off, and then finally we get to Robinhood and we see Stonk Brokers, and it's like NFTs with utilities. About time.
Yeah, something went from basically nothing to around 10K in valuation. We haven't seen that. We're talking floor price for a Stonk broker itself, right? So we haven't seen that since the ordinals days. So it's getting everybody questioning what the hell's going on.
Yeah.
How did you do this, right? So we definitely want to explore as much as we can because we think what you've done is actually like there's a much bigger breakthrough that you've actually achieved here that not enough people are really talking about, which we'll get into. But give us your origin story, your lore backing, because you have a connection to Yuga Labs and ApeChain and all this stuff. So if anybody was going to actually crack some sort of NFT code, it would make sense. It would come from somebody like you who has like that much of a vested interest in seeing NFTs, further its progress to some degree, right? So if you can just kind of like take us back where it all started.
Yeah, for sure. So, I started trading crypto on Arbitrum 1. I was trading decentralized options on a platform called Dopex and did that for some time, made fairly good profits. I think more than anybody else does in options in crypto, on chain at least. And was able to use that to start developing my own product. And I started developing my own product line mostly because I was getting really disillusioned with some of the investments I had gotten into. Essentially, would buy into things heavy, believe in promises, and then get let down. And I was like, forget this, man. I'll just do it myself. Create your own luck, right? And essentially just started developing and building a platform. I built things like an OTC desk first for peer-to-peer swaps for NFTs and tokens as well. Then I built a prediction market, which worked in as a parlay platform, a decentralized parlay platform that had one side being a decentralized house. And the other side is essentially where people can place parlay-based wagers. Those wagers themselves are NFTs. So if you start getting on the theme, I like to use the NFT model within my builds. And essentially, you could trade the positions too because they are NFTs. And I'm doing the same thing with this options platform we have coming later. Because I made the decentralized parlay platform, I got a grant from Arbitrum 1 and I got a grant from Polymarket. And that kind of put me on the radar of some people. And so ApeChain wanted me to deploy with them and then try it there. And it was really successful. I got along well with the community. And essentially the head of ApeChain, Cameron, at the time, invited me to work for ApeChain as a head of DeFi. I accepted and I worked there for about a year. I learned a lot and it's different, trading in the trenches and working for a chain, especially like a layer 2 chain. I gained a lot of connections, though we did a lot of big things, connected and did BD, both with MetaMask, Solana, Base, Hyperliquid. And, that level of experience, I think, is very positively reflected on my ability now to execute on, the Stonk Brokers project, because the Stonk Brokers actually started on Robinhood Chain testnet about 8 months ago now. And we were selected as the most fun launch. Essentially, we got a nice shout out. And since then, I've actually kind of been developing this game plan and aggregating community to kind of push a high level of distribution so that this can go well. And so far, of course, it's exceeded my expectations, and hopefully we can continue to exceed expectations.
Yeah, I think you've definitely, anytime a new chain kind of emerges, we kind of see, a cyclical show, if you will. It's because the standard primitives show up, who's going to build the first decentralized exchanges, who's going to build the launch pad the quickest for the meme coiners and stuff like that. But in your case, you're the first one to kind of bring in the first one we've seen in a while, like on a new chain, someone to bring in a new product that's much more tailored to like what is the novelty of the chain itself, right? So for one, respect to Robinhood in itself for actually bringing like a new primitive to the table.
Mm-hmm.
That's what crypto was always like looking for. And then kudos to you for being like so far the dev who understands kind of like what's the task, right? It's when you come to deploy something on a new chain, the goal, the motivation should always be to leverage what it is that makes that chain so uniquely valuable.
Yep.
And like the most optimal product, right? So that I think that is why Stonk Brokers is kind of like it has like a never-ending growth trajectory to it. It looks like compared to everything else we've seen over the last few weeks, right? So, but take us back a little bit more because I think the most critical technical component you've brought to this ecosystem is that Anvil AMM, which originated on ApeChain, right? So, what was the concept or what was the motivation to even work on that? Was it purely like you're trying to solve the NFT liquidity issue, so you figured this is the best mechanism to do that?
Yeah, essentially, like I said, working at a chain, you see certain chains are good at certain things and other chains are better at other things.
Yeah.
Arbitrum is very good at DeFi. ApeChain is good at NFTs. And when you're good at one thing and not so good at another, you get into holes. Obviously, the chain either will lack token trading volume or other chains will lack NFT trading volume. And so that chain with a lot of NFT trading volume actually has like a surplus of community and like it's super active and fun, but then they don't have like super deep liquidity. While, a DeFi based chain is actually kind of boring, like their spaces are empty, but they have a ton of liquidity. And so I was like, how can I merge this? And that's why the main thesis with Stonk Brokers development is combining improving distribution and infrastructure. So NFTs as a whole suffer from poor infrastructure. And I think that's been the main issue of the past, 4 or 5 years, essentially. Outside of CryptoPunks, a lot of collections obviously struggling to get to these higher market caps because they're very illiquid. However, they have exceptional communities. And I would argue significantly better communities than some meme coins that have run a lot farther.
Yeah.
And my thesis is that is essentially an infrastructure problem. It's not a fact that these teams are underperforming, but they're essentially driving a Ferrari with bicycle wheels on it.
Mm.
Is the main issue here.
Mm-hmm.
Yeah, we've seen that ourselves. Just comparing the two markets, like if you look at the fungible token market, it's like 99.9% of the overall crypto market value. You look at NFTs, it's like a blip.
Yeah. Yep, that's
and
right.
we always wondered, because NFTs captured a lot of attention.
Retail attention.
Like massive attention. Like
Yeah.
literally every celebrity on earth was like interested in crypto for the first time, right? But it's not really reflected, like you're saying, when you're actually analyzing the market, compared to fungible coins. So I think you're right. And there's been other iterations and attempts like ERC 404, I think was like something.
Fractionalization, yeah.
Yeah. So what did you see as that like not being a suitable solution to that problem? And like, what is the comparable difference between like your AMM processing, to fulfill this like instant liquidity for NFTs compared to that model?
Yeah, I mean, so just to pedal it back a little bit, the main thing when I first started trading on Arbitrum 1, there was a hot DeFi summer season, right? And during DeFi summer, tokens would run hard based on like bullish white papers. So what you looked at to analyze if a token was good, you looked at its contract. And so tokens that had custom functionalities, these features or hooks that essentially break functionalities at scale were immediate red flag no-go. And I've been surprised actually that some tokens with custom functions have scaled a bit higher than I would have expected. I simply believe that your core asset as your token, your ERC20, cannot have custom functionalities that break your token when it gets listed on centralized exchanges for the reason that 99% of trading, 99% of liquidity and users still don't trade on chain. So you're essentially putting a major cap and ceiling on your product. So you can have an exceptional product and a poor infrastructure base, and you won't be able to break that ceiling. And I think that's what NFTs have been seeing. And so, like you were mentioning earlier, NFTs are actually really fun. Like the community side is fun. I went to Ape Fest for the first time this past year. They had Outkast come through, Kodak Black, huge party. There was like thousands of people. There's nothing in the industry like that in terms of fun. And that's why the celebrities liked it too, actually, because it vibes with human culture, like things that regular people are into. But then it couldn't lean into the infrastructure that meme coins essentially have. So on Solana, meme coins have excellent infrastructure, and for that reason, they run to like a 5-10 million market cap. They get picked up by Moonshot, other centralized exchange. It runs to 100 million, 200 million. All of a sudden, you have this vaporware asset that's extremely, extremely expensive on chain, and so that team also gets a lot of funding from LP fees, and they get a lot of attention. While you have teams that have superior community, superior products with less funding. And so what we end up doing is we're pushing worse products to the top. And then these teams at the bottom who are doing actual good things that normies would resonate with are struggling. And so the main idea was to create the Anvil AMM to get a clean ERC20 token that can be bootstrapped to an NFT and give NFTs that elite scalability factor.
Yeah, so the Anvil AMM is very attractive from our point of view because we've been seeing NFT since early days, 2019, and we're seeing the same thing as you're seeing, that it's very difficult to have the liquidity issue rectified when it comes to NFTs, and I think this Anvil AMM does a really good job of that. But I think it's important to really describe Stonk Brokers for the audience and how you're using Anvil AMM with Stonk Brokers and the overall product.
Yeah, so if you think about Stonk Brokers, think about it as one product. So you have the Stonk Broker NFT and the Stonk Broker token, but they're really the same thing. The token is paired to the NFT at a pegged rate, right? And that rate never changes. You can claim tokens for NFT or NFT for tokens through the Anvil AMM. Now, the Anvil AMM functionality is not within the NFT's smart contract, and it's not within the token smart contract. It's a functionality we achieve by layering additional smart contracts into the process. And with that, since we essentially own the gate, the cycle between NFT and token and NFT, we're able to assess a fee at that point. That fee then powers revenue. And that revenue is shared to people who have activated their Stonk Brokers. To activate them, they have to burn a certain number of tokens. And anytime the Stonk Broker is transferred, that activation actually deactivates. So then we get a flywheel effect. As people enter and leave the ecosystem, it's actually positive. More tokens get burned. It's more and more deflationary. And that also pushes and drives revenue. And so the most important thing is to turn a flywheel into an engine. So now we're layering on long-term viable protocols and scaling vertically by bringing in additional partners through what I'm calling special projects features. And so this is very much like the virtuals model. And we have many interesting things coming through. We had a protocol come through called DERP, which is on-chain VRNG powered by real cash mining on-chain, which is a cool concept because it's an on-chain business in and of itself. That's what we like with special projects, like on-chain businesses. And then we peg those to the Stonk Broker token at launch. Those teams do. They get great distribution and marketing. They get essentially a team of brokers who are helping them grow, and we get positive price action. So it's a win-win.
Yeah, so just so that I understand, the NFT for Stonk Brokers is essentially an asset, an NFT that can be converted into the fungible token at a given ratio. How did you come up with that ratio? Is that based on like the just the supply of the NFTs versus the supply of the fungible tokens?
Yeah, so the Anvil AMM is actually a permissionless smart contract factory that exists on chain that anybody can tap into to make their NFT fractionalized. Now, we've had fractionalized NFTs before, but they were all built with relatively poor infrastructure. They would use things like mintable token functionality, or they would be like 404s essentially, things that centralized exchanges won't touch, like we said earlier, limiting scalability.
Yeah.
With the Anvil AMM, when any team, and this will be any team on Robinhood Chain soon too, because the Anvil AMM will be available for everybody the same day that the Stonk Launchpad launches on Robinhood Chain. So any NFT community will be able to get this fractionalization power. They essentially come in, they put in the CA of their collection into the contract. The contract detects how many NFTs are in that collection, and then they set how many tokens per NFT. Based on that, you get your full supply of your token, and you're able to set the rates. What is the rate for swapping for any NFT in the collection? What is the rate for sniping a specific NFT? You get loan functionality, which is also a great DeFi asset because it helps boost revenue, and you get staking for your NFT collection.
So what comes first? Does the collection come first, and then through the AMM, the fungible tokens come after, or do you need both? How does that work?
Well, the interesting thing, you can very much experiment with it. Of course, the NFT does have to come first, but you could essentially run a mint through the Anvil AMM if you wanted to.
I see.
I mean, it would be interesting to see how it goes, but you could technically do that.
Sure.
You can also mint out your collection fully and then activate the Anvil AMM at any time. And it's important that it has this infrastructure because best case scenario, not just for us at Clutch Markets, but for the whole industry, especially NFTs, is that a lot more of these blue chip OG NFT communities who have really proliferated and improved their IP plug into things like the Anvil AMM because then they can scale. And I think they're going to be a much better proof of concept of what good crypto looks like than some of the memes we've pushed to the top.
So do you see the Anvil AMM working for existing projects that exist, like the NFTs that exist today versus the fungible tokens like ApeCoin and Bored Apes, for example?
Yeah, I mean, not specifically to speak on that, but I think it would work with any NFT collection.
Okay.
They would have to maybe if they have an additional token, restructure the way that those other tokens are looked at. Some other NFT collections have strategy tokens, which have also caused them issues. But essentially, I think it would work really, really well for any NFT collection because what it does then is provide a direct access point for buy pressure that then correlates real value. So like when you do cool things like when Pudgy Penguins puts the penguin on the globe and everybody around the world sees it, it's in Vegas, that buy pressure on that Pengu token doesn't just go to this meme coin, it's actually going to the NFT itself.
Right.
And then the community that you've empowered to market your product feels that a lot more.
Yeah, I feel like this has been missing in NFTs, and we've been looking at the fractionalization with 404, and a lot of these kind of like miss the mark, but this one feels different. And so when you come up with the ratio between the NFTs and the conversion to the fungible tokens, is that like just supply based, or is that just a number that the devs pick?
Yeah, essentially, it's very customizable. They get to pick how many tokens correspond to an NFT, and they get to pick the fee structure. So, based on the fee structure, you end up because what this is really doing a lot of times, not only causing the NFT to move with the token, it's also farming arbitrage. It's actually a lot like volatility farming. There's a protocol called Peapod's Finance that did that very well. In that you're creating this additional LP layer of your token that exists as an NFT, and then you have secondary sales on places like OpenSea going up and down, and also the difference in prices there powers arbitrage, which actually fuels this revenue and staking rewards further. So anybody can kind of experiment, and essentially the higher of a percentage you put, the more arbitrage you're farming given the volatility. It depends on really the volatility index of the token. Say your token has a 20% spike, but you have a 15% fee on the Anvil AMM, arbitrage farmers will earn 5% of that fee. But 15% of the fee will go back to the people who are the long-term holders.
Yeah, correct.
So it really depends how volatile you expect your asset to be.
Yeah, so there's another part of Stonk Brokers that we haven't talked about is the fees that you're accruing, the 10%, the 15%, based on what you decide to do with the, inside the Anvil AMM. A portion of it goes back to the NFTs, like you're saying, but what actually goes back are stocks, right?
Yeah. And so this is clock-in functionality. This is a new thing that I tried with the Stonk Brokers launch itself. And essentially, with clock-in, we're not protocol side doing any swaps. It's the pool itself is accruing ETH, just like an LP position would.
Right.
So the Anvil AMM kind of works a lot like Uniswap, but for NFTs and tokens. And then the community essentially clocks in to swap ETH for a certain stock token, and then those stock tokens get distributed to the active brokers. And that's kind of empowering everybody to work together to help each other and, give that little bit of gas back. It costs like 10, 15 cents to do so. And yesterday we actually upgraded the clock-in 2.0, where we've added a lot more malleability, where users can actually target certain tokens that they want to buy. And so this is where we get into really, really interesting on-chain experiments.
Yeah, I was curious. So, because you have sacrificed essentially the token trading side of things, because there's other projects on Robinhood like Index that's their main like flywheel engine, I guess, for purchasing of stock tokens and distribution.
Swap fees.
Yeah, but you've made an active decision to go against that for logistical reasons, right? So the token has more longevity and industry compatibility and all that. So your approach is now to integrate as many revenue streams as possible through all these like, connected suite of protocols. So this AMM that you're going to open access to for basically anybody to build off of as soon as the Launchpad deploys, I think is what you said, is a portion of that, like if anybody's utilizing that AMM for any other secondary project, is that also going to funnel revenue back to the Stonk Broker ecosystem in any way?
100%. And so there's actually like several layers, and gosh, it'd probably be a lot for one audience to keep up with here. But for example, let's just talk about special projects. Special projects runs very much similar to what you saw on base with virtuals, in that with special projects, any partners we bring in have to pair 50% of their LP with the Stonk Broker token. They can pair 50% with whatever else they want. Also, they have to deploy using our safety deposit box, which are liquidity lockers that I've created on chain. Those liquidity lockers split LP fees 80% to their team, 20% back to the stock booster, essentially back to the activated Stonk Brokers. Also, they have to have some piece of their business that drives the revenue back to the stock booster, and that's negotiated at that time. It could be 20%, 30%. It depends who we're talking to. The most important thing with the special projects is we're looking for proprietary unicorn technologies. We're looking for these wow moments and these high ceiling products. And then what I try to provide to the best of my ability is the little bit of consulting I can do in advising them on infrastructure. So I can give you guys an example. We had a token come through that essentially wanted to do something similar to the OM token that we had, the DeFi token. And they wanted to have a tax within their token and also use that tax to accrue revenue and then do different things. And I told them, I won't accept any tax tokens as special projects on the Anvil, on the Stonk launcher. Instead of doing a tax token, why don't you have a regular ERC20 and create a wrapped version of your token, or like a V token, and all of your tax functionalities in your second LP run through that V token, and then essentially funnel that revenue back to the main token. That way, you still have the prospects to get that main token potentially listed on the centralized exchanges and be, one of the best products in the whole industry.
Yeah, that's an interesting strategy. So can you explain a little bit about that V2 part? It's like a wrapped version of the original token?
Right, exactly. So if you need a mintable functionality, or if you need a tax functionality, I don't think it's intelligent to do that through your base asset.
Okay.
I think it's better to create a wrapped version of your token that people can bridge into essentially, and then have your mintable or your tax functionality. And then with that bridge also, you have a moment where you can either assess a fee or do a burn. You can do many interesting things and create an interesting experiment.
Yeah, that's really cool.
Yeah, so like define the main issue with the preservation of like the core asset. What is it that is so conflicting with these exchanges? It's just like any logic, any custom token logic. It's just it's a motherfucker for them to support, right? Like they're not gonna do any technical due diligence to support like all these splits and taxes and crazy shit happening, right? It's not gonna happen on our platform, right? Is that the real barrier of why you want to like create like a synthetic layer around your core tokens?
Exactly. Yeah. I mean, otherwise you would essentially have to have all centralized exchanges on planet Earth agreeing that they're going to support and honor tax functionality. And so that's going to create custom logic within their apps, within all their infrastructure. I just don't see this happening, at least in the near term future. And so what I'm saying is you don't want to limit scalability. If you're immediately assuming that your token's never going to be listed on a Binance, Coinbase, a Kraken, a Gate.io, your token is never going to achieve its maximum potential. Why would you start from that basis? You have to start from a basis where you can get to your max potential, is just my opinion.
Yeah, I think it's a viable opinion to have.
Yeah, I agree.
Just on the historical, I guess. I mean, there's a little bit of, I guess, like room for debate there, I guess. I don't like the last cycle, a lot of the successful meme coins, I guess, kind of like found their graveyard status at these centralized exchanges. Like WIF, as soon as it got listed on Coinbase, it actually just only went down. And a lot of Binance coins also same thing. It's like typically once an organic on-chain creation like gets to a point where a centralized exchange embraces it, it's like that's your exit window. So I don't know if that's like going to be a forever thing. That's evidence of some sort of transition away from centralized exchange dependencies or like fully on-chain dependent. I don't know, but I think you're right in kind of like advising builders out there to kind of like understand how the industry actually operates, because yeah, centralized exchanges are the true gatekeepers to a lot of things, right?
Yes, retail access right there.
Yeah, and it's typically not like a technical. I mean, yeah, technical is one, and then another is financial, right? A lot of these things, like you need significant fundage just to get support for a lot of these things. So yeah, I guess you've hit runaway success in this sense. Like, you know, from our point of view, your project here, Stonk Brokers, it seems like the flagship creation so far as like what Robinhood is supposed to be about. You probably wouldn't be able to tell us this anyways. Have you gotten any kind of interaction from the Robinhood core team or foundation at all, like recognizing what it is you're working on? And if if you have or haven't, just you don't have to disclose it here if you don't feel like it. But what have they said? What's the reaction been?
Well, the testnet phase of the project, they came out publicly at an Arbitrum One seminar. One of their BD leads, Adam Fern, came out and said it was the most fun project. So that's like very much public recognition, I think. So that's no secret. Other than that, our contact has been based on tooling. So I haven't been messaging them like, hey, can you retweet this? Or, hey, can you follow us? Like, I believe that will happen when it's the right time. And I trust that the chain knows what they're doing. Like I said, I work for a blockchain and I know kind of internally how these things operate. And, I would like to give them their time to make their decisions and pull the right switches at the right time, which I think they've already been doing. So most of my conversation has been around like, hey, can you give me the list of all the stock tokens that are available? Hey, when is Chainlink VRF coming through? Stuff like that.
Yeah, Chainlink VRF is pretty critical. I mean, we were looking for that ourselves. And you mentioned DERP, and isn't DERP the sort of like the random function on-chain project that you were mentioning earlier?
Yeah, it's decentralized entropy from random proofs. And
that's right.
There's essentially a builder. Oh, can you hear me still?
Yeah, we can hear you.
Yeah. And there's essentially a builder that was on ApeChain at the time where I was actually also working for ApeChain, and he was doing mining. And this guy just loves mining. It's his thing.
Yeah.
And later, once I came out with Stonk Brokers, he essentially DM'd me and he's like, hey, I found a way to generate random numbers for my mining. I was like, well, we need to talk because I need those random numbers. And you now have gone from being something that's just perpetually inflationary to a potential on-chain business. And so I advised their team, to deploy with special projects. As a founder named Uncle Mac, he did a great job. They've launched. The random numbers work very well. It's powering our on-chain RWA gachapon right now. And, I hope they'll continue to scale. I've advised them. I said, Chainlink's VRF is on the way. That is your white whale. Beat them, be cheaper, be faster, and you've won the game. So
yeah, I heard Chainlink is pretty expensive, and so I'm sure DERP probably has the ability there to make it cheaper for everyone else. And random number generation is absolutely critical. We've seen kind of like the issues with Cold Card when they kind of default to kind of lower entropy randomization. So it's super critical. But I want to go back to the stock equity portion of the NFTs. So you were describing a little bit about how these stock equities end up into the NFT, but is there something that the user has to do specifically to pick a stock, or how does that work?
Yeah, and this is a very cool thing that I really love that we added yesterday, actually, with Clock-in 2.0, is that now the user has a lot more power over what kind of things they want to diversify their distributions into. And so previously, essentially, it was locked in on certain assets. Now a user can say, I would like ETH, I would like USDG, and we even added Stonk Broker token as an option, which a lot of people are picking, which is funny. Like 60% of brokers have been choosing to receive Stonk Broker for the distributions.
Yeah.
And NVIDIA is the highest stock token at this time. And this is a very malleable contract, the clock-in contract itself, because it needs to have like a V1, V2, V3, so that we can continue to layer on these additional RWAs as Robinhood Chain brings them online and continue to make this an interesting situation. And I think with our Stonk launcher, for example, it gets really interesting because you might have meme coins coming through that are really hot, or you might have a special project coming through that's really hot, with our virtuals model, essentially. If the Stonk brokers are bringing in really, really sizable revenue and they collectively decide to target their revenue at like a certain token that's not necessarily a stock token, maybe a DeFi or infra play, or even a meme coin like a Stonk.
Sure.
Then I think we get into a really interesting on-chain situation. Like, how does the market react to that?
But is it per NFT? Like each NFT can decide what asset they want, or is it like a collective decision?
Per NFT, correct.
Okay. So I'm curious, like how does that happen? Is it just through an interface that that's on Stonk Brokers, or how does that how does one choose which assets to receive?
Yeah, essentially there's a supportive contract that is reading which brokers are activated to which tier. And this contract is malleable in a way that the brokers themselves can come through and target certain CAs. And they can also put weight on certain CAs. It's like a mathematical equation.
Hmm.
And they can say, I want 66% of my distributions to go to NVIDIA. I want 33% of my distributions to go to ETH, et cetera, et cetera.
Hmm. Wow. Yeah, that's really cool.
Yeah, that's very... that's interesting. I guess it kind of brings a question of, so this is something that's very probably intuitive for a lot of your core users, and this is not just for you. This is for anybody building in crypto. Like right now, I think part of the problem is like whatever it is you build, you're really tapping into like the crypto Twitter nexus of user activity, and so these are people who are like pretty veteran, experienced trenchers, and they've interfaced with many protocols in the past. So you introduce features like this to them, it's like a no-brainer. Like how do I understand why this is valuable, and I know how to fine-tune it to my own needs. But what are you guys' thoughts as far as like, strategically building out new features or new products or whatever that are more targeted towards, the retail consumer base who has absolutely no experience in crypto, but clearly they exist and they're connected to this chain that we're all building on, right? In Robinhood, there's 30 million of them, right? And they all own actual equity in companies. They don't own like tokenized anything. And a lot of them would probably scoff at the idea of owning anything that is tokenized or crypto related. So there's obviously a big task at hand if you're building on Robinhood. It's not just leveraging the native primitives that this chain has offered us, right? It's like, okay, how do we tap into that new customer base, and like, what is the optimal formula of doing that? Like, have you guys thought about that? What are your plans as far as targeting that demographic?
Yeah, so the main priority right now is to create permissionless, decentralized financial technologies. Because I really do believe DeFi is probably the next step in our economic evolution as a species, as humans. And so right now, what we're building is essentially systems that work in this permissionless way, so we can interact peer to peer and do these interesting things, right? And then how people interact with those things is mostly a UI problem. It's less of an issue later when you get to retail. You just kind of make it feel better every time, a little bit better and better. And that's how Polymarket is essentially scaled. That's what I think is the best crypto retail product to date by far. One example of something that we put out that's using Web3 Rails that is arguably better than any Web2 product is our our broker box certificate creator. And so with broker box, users can essentially go on chain. There's on the app itself, they're selecting a stock token. So they can select, for example, one share of NVIDIA. That share is embedded into an NFT in a 6551 wallet. And then those users can actually input an email address. And then that email is sent to somebody and delivered. When they open that email, they click a link to go to our website. Then the website generates a smart wallet for them using Privy. They get a confirmation code. And when they enter the code in their generated wallet, they instantly get this asset, the one share of NVIDIA stock token. And so this is a very good asset. These stock tokens, they're self-multiplying. This is also a very good process, right? It's permissionless. There's not a lot of extra fees. You don't have to have this heavy load of, what a lot of retail Web2 companies do is upcharge for these services. Decentralized, permissionless financial technologies let us move from the, essentially these companies that are taking a lot in fees, charging a lot of fees, to cheaper, faster solutions, better financial technology, essentially.
Yeah, being able to send an email to somebody to receive a stock, that's a pretty big deal. And the way that you kind of like strung together these technologies to make it happen, and that's really cool. And I saw the certificates, these certificates where you can kind of embed these fungible stocks. And so that is part of the flywheel that you're trying to create when it comes to like the fees that occur through this product. It goes back to Stonk Brokers as well, right?
Yeah, exactly. There's essentially a $1 fee for printing
Okay.
them, and that goes back to the Stonk Brokers. And additionally, I really like this product not just for off chain like retail, but for on chain as well, because it enables a little bit of the horizontal scaling. So with the asset itself, right, we get this wrapped asset. It's wrapped in an NFT, a Robinhood Chain stock token. We can create a layer zero bridge and permissionlessly allow that NFT to be bridged to any other chain. So for example, I could have one share of NVIDIA. I install the layer zero bridge into, essentially the Stock Brokers website, and users can fully on chain bridge Robinhood Chain stock tokens to Ethereum in the form of an NFT.
Hmm.
And then in Ethereum, you can do whatever you want with that NFT. You can create other DeFi apps. You can bridge it to Arbitrum One, to ApeChain, to Solana. They can also do things with the Robinhood Chain stock tokens. And at any point, somebody wants to claim the actual tokens within that NFT, they simply bridge back. It's removed from escrow on the contract itself. And the cool thing is nobody can partially claim these. So nobody can come in and take like half the stock tokens out and then list it on secondary and sell it to somebody for full price. It can only be fully claimed. So they have to claim all of the stock tokens within the NFT. And when they do that, the smart contract logic is such that it's instantly burned.
I see. So once you claim those assets, that NFT is gone. And so basically these NFTs act like a vehicle of transportation, meaning if you want to use a particular protocol on Solana, for example, you could bridge it over there, use that protocol. Maybe it's like, I don't know, some sort of loan functionality against an NFT. You could do that, and then once you're done there, you can bring it back, take the stock tokens out, and then essentially that NFT is gone. So it's like this is like a vehicle product to be able to move these assets essentially frictionlessly between networks.
Yeah, absolutely. And so you can expect that that's something you'll see very soon and that's alpha for the block runner listeners, that there'll be the ability to move Robinhood Chain stock tokens between multiple chains powered by the Stonk Brokers technology.
That's crazy.
Is any of that dependent on the Stonk Brokers themselves? It's the ERC 6551 protocol, right? Like it's the ability to have like embedded wallets for an NFT. Is that why this is possible, or is it like a
Yeah, exactly. It's a wrapper essentially, but it's a custom 6551 in that most 6551s will allow you to partially withdraw assets. We can't allow that to happen, of course, because then at face the asset would look different from what's inside.
Do you foresee that these certificates being like listed on, OpenSea or whatever on marketplaces and that itself, the fact that it has embedded stock, is that like, do you foresee that being like a tradable asset?
I think long term, yes. I think maybe some countries are waiting for regulatory compliance when it comes to stock tokens, but stock tokens are such a strong asset. You can do so many more things with stocks on chain than you can do off chain in terms of revenue. With decentralized financial layers, with like options, for example, with the platform we're building, we can earn LP fees and premiums when trading options. While usually when trading options in the Web 2 world, you're only earning premiums. So this liquid asset is much more efficient. And so essentially, I think governments are not going to lean against anything that's going to push down the price of, like the S&P 500. Usually they want those numbers to go up, and stock tokens are a better asset.
Yeah, because the first thing that I think of about an NFT with embedded stock tokens is you can embed enough stock tokens to where that NFT has like a base value based on the value of the stocks. And then you can use that to get like a flash loan against it, and then, pay for, a car loan, for example. So is that part of like what you're thinking as well? Is like these could be composable DeFi assets as well?
Yeah, essentially, I'm going to make them bridgeable. We're going to assess a small fee on the bridge that's going to flow back to the stock brokers, because it's very important that all the systems work with the flywheel to keep pushing it. But then I'm just going to release it to the ether, maybe ping some developers I know. Say, hey, do you want to try to make something with this asset? It's pretty cool.
Yeah.
Yeah, I was gonna ask, like, how big's your team? Is it literally just you cooking up all this? Like, cause you're building out quite the web of like,
products,
contracts, and revenue streams. There's a lot to kind of keep track of. Or do you have like a swarm of agents behind you? Like, how are you managing all this?
I have partners. They must specialize in legal, making sure we follow all legal requirements. But I have my community. All the Stonk Brokers are financially incentivized to make sure that we do well, and they do a great job of all the marketing work, essentially, monitoring the Discord operations day to day, X and all that stuff, making sure they answer questions and onboard. it's a massive force,
Yeah.
to have this many people supporting a product.
Yeah, which I think is, through our history here in crypto, is typically what people want is to, find a project and a founder who is obviously about it, right? And they want to come in and contribute what it is that they're naturally good at, right? They're not technical people. They're more like social, very vocal, very community oriented type of individuals. And they know like that's the real superpower behind any project, really. It's like you can be as technical as you can be, but if there's not like an army or a horde of people behind you, like kind of amplifying like all the cool things you're working on and making it make sense for the masses, then you're pretty much screwed, right? So yeah, how's your approach with that, like managing the community and like, your experience so far? Because I mean, you've been in crypto for a while, so you've seen a lot. How do you approach like the responsibilities of being a founder, right? You got to show up to Twitter Spaces, you got to do stuff like this. What are your future plans as far as like, continuing this growth of the Stonk Broker clock-in community?
Yeah, I mean, I think we scale very well because of the model we've adopted, where we're essentially bringing in a lot of special projects and new technologies to bootstrap themselves to the Stonk Broker token, and we all collectively grow together. It's like this hive mind of technology and builders essentially scaling fully on chain. And then I'm sure during that process, there's going to be a couple winners pushed to the very top, getting listed on Binance's, on the Coinbases, and we'll celebrate every single win like that all together because financially it'll make sense. They'll all be paired by LP essentially. So that's, I think, the building strategy that allows us to grow in such a drastic way without me having immense overhead. And that's when crypto is working well, right? When we're not relying on a lot of external APIs and backend features to make our products functional, we're relying on each other, and that's good DeFi.
Yeah, I just thought of a question, SimpleFarmer. Let's say in like this is extremely successful, right? It's $1 billion token. Do you ever think about that the exchange rate between the tokens and the NFT become too high at some point, where it essentially, the success of the project sort of slows the project down in terms of the fees that are getting swapped? And is that the motivating factor to creating these different products so that it mitigates that?
Yeah, I think it's actually a pretty simple solution. An obvious solution is to do something like an interns collection, that essentially every Stonk broker has the power to create like 2 interns, and then they can give that intern maybe 10% or 15% of their net distributions. And then that is an NFT that's tradable as well. And at that point, you're not really you're not diluting the pie, you're just cutting into more pieces and you're making it more accessible.
So then those interns become less of a ratio exchange than the head guy, right? The broker.
Right. Technically, yeah. They could be like 10% the value of a broker or 5%, depending on what happens. We'll have to watch the market and decide on that in the future. But it's just an idea for now. It's not something I'm working on. But what I'm saying is with blockchain, there are simple solutions.
I see. Yeah. Yeah. Because, once the exchange rate gets too high, then it's like things slow down. And I think that's a reasonable kind of approach.
They do, and then it depends like on the, I guess, the state of the market at the time, right? I go back to OG DeFi summer days. People were spending thousands of dollars just on a simple swap back in those days just to cover the gas fees of the network, which you obviously don't have to worry about that because you're building on Robinhood. Like, no matter how successful this ecosystem becomes, fees shouldn't become a problem.
Yeah, agreed.
Let's hope. Let's hope that Robinhood did a great job. And you have some insight as far as that goes, right? Because it's all built on Arbitrum. And so, yeah, can you speak on that a little bit? Like, what are the, historically, Solana is like the consumer chain, right? Like, and everybody has experience with that. Like, do you think what Robinhood has put together is in parity with what Solana offers, or is it far superior? What's your insight around that?
Well, I think essentially Solana, what they did is they created really good infrastructure for meme coins to run, right? You'd have like Jupiter, which is an excellent swapping router, and you'd have Pump Fund, which is a great launch pad, and then they'd make sure centralized exchanges are ready to list a lot of these tokens. So then they get these runners, and then they get this, on-chain meme coin casino essentially, and it's a different type of product than Arbitrum One, who's essentially moving more like a financial company. Arbitrum One very much is in Washington, D.C., rubbing elbows with politicians, making sure that certain regulatory pathways are open so they can continue to bring great RWA assets on chain. And that's, in my opinion, a little bit more important. Robinhood Chain, I think, picked Arbitrum 1 for that reason, because it aligns with the mission of the things that they're working on. And then, when it comes to that fun on-chain trench side, it already seems that Vlad Tenev knows how to pull some switches and make the situation fun for everybody. And I'm not concerned, because I think essentially, as long as you create a positive environment for builders, and then we have things maybe like Stonk Brokers that are pushing up great technology to the very top, then we end up growing the pie essentially, where we're no longer worried about, why is there less and less liquidity here every month? If crypto is producing some of the best technologies in the world, we're going to see more liquidity entering long term. If we're pushing some of the worst technologies in the world, vaporware essentially, to retail consumers, we're going to continue to see less and less liquidity. It's just a natural effect.
Yeah, that brings up a good question. It's like, just to kind of zoom out a little bit, what's your take on crypto overall in the context of retail and the appetite that retail has, and sort of like the sentiment right now in crypto? Do you still feel confident that this is the thing that most people on the planet will be interacting with? For example, we have the Clarity Act potentially coming through, and that essentially says that all these assets like stocks are going to be on chain. So do you feel reasonably confident that eventually crypto as a whole will get their act together and not push these vaporware products like you're saying?
Well, it depends, right? It depends what is the most rewarding. If it's rewarding to build technologies on chain, then yes. If it's rewarding to try to front run people and rug pull liquidity, then no. So it depends on what kind of ecosystem we're building, and if it's, a merit based ecosystem and not a essentially ecosystem where people's friends win. Just like in countries, just like in economies, corruption leads to a lack of progress and development. And so crypto has to make sure and avoid corruption.
Yeah. Yeah, I tend to agree. And right now we're in the economy, we're seeing a lot of gambling products, like you mentioned, Polymarket and all that, and it's getting a ton of users. And so we always debate on like why that is, and it's like a portion of people's sentiment across the planet, just completely outside of crypto, that they have less confidence in the future, and so they start to gamble a little bit more, just because they're sort of losing hope. And are you starting to see the same thing? Do you see a trend towards like gambling products, or is this like just like a crypto phenomenon?
Look, I think a little bit of the situation with like meme coins is that people became bored essentially. Maybe there was not as many tools to build with, maybe like the token standards didn't evolve fast enough. But at the same time, I kind of blame the industry itself. It's on the chain leaders. It's on the chain leaders big time, but also a little bit on the media to make sure that certain things get pushed to the top. And we haven't been pushing quality products to the top. For that reason, people have just been trained to essentially gamble instead of invest. And so that's why gambling products are doing exceedingly well. Now, I do also think that the best gambling products are on-chain products. I think Polymarket is superior to Web2 betting platforms because of the way it works.
Sure.
The on-chain functionality gives it special features. I do think parlay platforms will move fully on-chain as well very soon, like the DraftKings and the FanDuel. I built a decentralized house parlay platform that proved that that's a better and more efficient system. And it's better for the world as a whole because it distributes funds a little bit better, especially in poor regions. But I think it's just that the causation is mostly based on what we've been trained to do in the trenches.
Yeah, I tend to agree, and it's to me it's like actually I have a question. So when was the first time you interacted with crypto? Like what year was that?
Oh, that's a great. I don't even remember the exact year, but the first token I purchased was Dogecoin.
Oh wow.
Okay. Was that like pre-2017 or?
It was probably. I mean, it's been around since like
2013. Yeah. Okay.
Yeah.
Okay. Yeah. I was just curious.
I got Dogecoin under a penny. I was under a penny.
Okay. Yeah, I was curious because back in when I guess in 2016, 2017 era, there was the era of white papers, and if you had a good white paper, a good website, you had a good ICO. And really it was a moment where things were a little bit inspirational, just because every single white paper said that they were going to change the world, and then you sort of made your bet. And so now it's sort of transitioned to kind of like vaporware products and things like that, and a little bit of gambling. And so we're trying to figure out, because we're also builders ourselves, we're trying to figure out, like, how do we decide on what to build? And right now, like, the market says gambling products. And so it's like, do us as builders, do we just like decide to build gambling products, even though it doesn't have like the same feel of like changing the world, so to speak? So like, how do you decide like what to get into? Is it market driven, or is it just like you're just experimenting with like cool ideas that you have and putting it out there and see if it sticks?
Yeah, I think the best products in crypto are based around infrastructure and distribution. There are some gambling products that provide great distribution. Polymarket it's a gambling product, but it's also world renowned because it gives us great data. It gives
Absolutely.
us decentralized data. And so that's actually what made Polymarket super famous, is because then you see news sources following the money to figure out and
Yep.
predict what's going to happen next. That's on-chain technology working well. So I think there's many places where you can fit into. There's probably a lot of token standards that haven't been invented yet that we're waiting for. I think a lot of people are going to do interesting things with AI, but a lot of times people are kind of making AI the whole product
Yeah.
rather than a piece of the infra. When I'm building, I kind of look at all the token standards we have, like 721, ERC20, 6551. And then I'm like, okay, how can I make these things work together in dynamic ways that can either create revenue or create interesting attention or price action, because price action is important for attention, of course.
Yep.
And then how can I combine these in different ways? It's essentially, like it actually came from a business I used to do. I actually used to part out things when I was back in college. And so I found like this headset that was an Xbox headset on Amazon, and it would
Yeah.
come with this sound processor adapter. The sound processor adapter itself sold for $80, and the headset in the package with the sound processor sold for 50. And I'm like, okay, I'm just going to take out all the sound processors, sell them for more, sell
Yeah.
the headsets on eBay, and make a profit. And it's that concept, right?
Yeah.
Part things out and put them together in different ways, make them profitable.
Yeah, I like that, because that's how you discover new primitives, new functionalities that people can sort of experiment. And you have the experience that anytime you introduce something new in crypto, it tends to do pretty well, right? Just because blue skies and rainbows is like what attracts, like it's the new shiny object. And that's largely what we've seen successful too in crypto. So we have a few more minutes. Do you want to talk about like what's next for Stonk Brokers? And you already dropped some alpha in regards to the certificates, but anything else that you want to disclose here as far as like the next steps for the project?
Yeah, so we're targeting, essentially very soon, the launch of the Stonk Launchpad. And so this is going to be a classic token launchpad that uses the bonding curve model,
Mm-hmm.
but I'm looking to create the highest RTP form of meme coin or token trading ever. And I'm going to be doing that by putting VRNG into the game. Essentially, the system is going to work in a way that people are trading all these tokens. Obviously, the protocol generates a ton of revenue, like launchpads do. And a portion of that revenue is going to go into a pool that loads in a bar. And that pool is going to first max out at 5K, then 10K, then 20K, and then all the way up to $1 million. Every time the pool reaches its threshold, somebody in the community is able to clock in, and it sends all of those funds to buy a random token that's been launched from the launchpad itself. So then you're going to get really interesting candles, essentially. And picking which meme coin is going to win is a much fairer game.
So you're saying picking, or are you going to use the VRNG to randomly pick?
No, the VRNG will randomly pick. I'm saying from the user perspective, you have a much better chance of picking the right meme coin.
I see, because the protocol had picked the thing it was going to purchase.
Exactly, because the random numbers decided who's going to win,
Right,
instead of insiders.
Some cabal.
yeah. Yeah, that's cool.
Yeah.
Yeah, that's interesting.
So when's the launch? What's a ETA?
Yeah, we're looking to get that out by the end of this week.
Oh, hell yeah.
Interesting. So what are the best preparations, I guess, for people? Just you don't need like do you need the Stonk Broker token in order to participate in these launches, or it's open to all?
You don't need the Stonk Broker token, but if you have enough Stonk Broker tokens, you swap for a Stonk Broker and activate one, and then you essentially become part of the revenue stream. Because another portion of the revenue goes to the stock booster for these distributions. And so having a Stonk Broker is very lucrative, of course, if this platform does super well and achieves distribution, but of course not financial advice. It's an experiment. I don't know what's going to happen.
Yeah.
But to participate, you just come through and pick a token. Theoretically, you could pick the least funny token that's been launched, the least talked about token, and win the biggest. Because, like I said, VRNG is going to be the deciding factor here.
Yeah, that's really cool.
It's going to be interesting to see, like, basically the culture that emerges from this, because that is what meme coins so, you know, powerfully do. It's giving the community the ability to, you know, it's like a open game for everyone to compete. Like, who's going to create, the funniest meme.
Yeah.
I'm imagining a lot of these things are obviously going to be Stonk related. And I don't know, maybe derivative meme coins off of the art style itself. That's the last question I wanted to ask. Like, how did you come up with the art of the Stonk Broker itself?
Yeah.
You know, that is definitely an interesting caveat to all this. It's like, you know, how much emphasis is centered around like the art and the collection of the Stonk Broker, as far as like how you see, you know, the future success growing from here.
Yeah, I think the art is very representative of the technology itself. I did it myself, and it's an artistic process. You know, beauty's in the eye of the beholder. I like them. I like them. They have interesting colors. I would put one in the wall of my office. I plan to. So, you know, maybe one day it's a Mona Lisa. It depends. Do we have to wait until after I die for people to decide it's really good art?
It definitely has the look and feel of like what you would identify an OG like thing to be, kind of like CryptoPunks, right? Like you look at a CryptoPunk, it looks like the first like a PFP, right? This looks like the first iteration of like, you know, some new class of NFTs that are, you know, essentially mainstreaming the palette of utility around NFTs. Because I remember, you know, whenever NFTs were exploding, anybody who was attempting to iterate around utility, they were laughed out of the room.
Yeah,
like, what are you doing? It's like it's NFTs are not about that. It's about the culture. It's about the art, and only that, right? But I think we're gonna transition here to a new model, right? So yeah, I'm a fan of everything you're doing, everything you're up to. I think you nailed it as far as like product market fit for the Robinhood ecosystem, even though it is kind of early to like say that. It's only been like a month, but nonetheless, we've seen a lot. We've been literally looking at everything that's launched, and like I said at the start of this, you know, we're kind of like exhausted with this like ritual of like a new chain comes to town, and then you see all the standard primitives show up. You see all the standard meme coins all in the same color palette of what like the native token palette looks like. Is like, okay, how long are we going to run this, you know, this circus, right? But this time feels like something new and refreshing is finally brewing from this. So yeah, just kudos to you, and just, you know, more power to you to continue and in your community and everything. Cause I think these are the types of things that we look for when we were doing our crypto investigations. Like this is what we found in ordinals, you know, 3 or 4 years ago. That's what kept us in that ecosystem for a few years.
Have you heard of ordinals before?
I have, yeah.
Okay.
So
just as checking.
Yeah, we're not talking nonsense here. But yeah, like this one, there was a lot of builder vibes just like this in that ecosystem at the time, and it was the part of the market cycle where it was just pure despair, right? FTX just collapsed. Everyone was like trying to find themselves, and like ordinals was this shining beacon of hope, right? So we're really hoping Robinhood doesn't let us down.
Yeah.
and like
I don't believe they will.
Yeah. Okay, good.
Yeah, so far so good. Like the like everything that we're seeing. But SimpleFarmer, thank you so much for joining us today. We've been watching all your interviews with all these like different streamers and podcasts, and we really appreciate all the work that you're putting into. So thank you for your time. For everyone else, all the links for SimpleFarmer and Stonk Brokers will be in the description. I appreciate you guys for watching, and we will catch you in the next podcast.
Peace.